Welcome to A View from the Floor here at the New York Stock Exchange. I'm Michelle Yu, joined by Dave Stryzewski, Sound Planning Group CEO. Thank you so much for being here. And I just want to start. We have been experiencing high stock swings in recent weeks. Is this the new norm for investors? And is this what they're going to expect?
Well, yeah, I think that this is the new norm in the world that we're living in right now. The last 100 days or the first 100 days of this administration has bring a lot of change. We still have sticky inflation. There's still a lot of things that are going on right now. And so the world's just kind of getting figured out of, what's heads and tails of the future here.
So how exactly should investors navigate this volatile stock market right now?
I like this term to ride bulls and to tame bears. The goal is to find 70 to 80% of the gain while missing 70 to 80% of the pain. How do we do it? We need to be a little bit sensitive to what's taking place in the short term, midterm, and long term. It's kind of hard to have a long-term perspective when there's so much going on in the short term that's crazy. But when we have the right hedges in place, when we have the right strategies in place that'll give us the ability to navigate these downturns in better form and fashion, we can then allocate back into the market when things go back on sale again. So we want to ride bulls and tame bears.
What type of opportunities do you think are out there, and what should investors be looking for, you think, right now?
Well, clearly AI is still very important. I think it's shifting a little bit, though, because we've not really had the conversation of what's the most efficient chips or best and most practical uses. I love all the technology that's coming out right now, but I'll be candid to say that I think that we're going to see a revaluation of metals and metal miners. It's been almost 2 decades that metal miners have been down like this. We've seen the price appreciation of gold, but we've not seen the miners appreciate in the very same way. And so I think that you're going to see massive swings on the upside. I think that you're going to see those miners lead actually into the future here the next 3, 5, 10 years. And I'd actually probably even pay attention to the juniors right now, because if it's a drill baby drill moment, it's less exploration, more acquisition that will just show up. And so I think if you can buy them right, you got cheaper ounces in the ground, there's a really great opportunity there.
And of course, recently, the Fed has been criticized by Trump as he wants to lower interest rates. He even threatened to fire Fed Chair Jerome Powell, but now he has backed down from that threat. How do you perceive the situation? Do you see it escalating?
I think it's actually going to cool down. One of the things that we can know about at least Trump's track record is that as a New Yorker and a negotiator, he might say something extreme, but his whole point is to get you off your number. And so I think that there's going to be some Mar-a-Lago Accord or some thing that's going to happen here with China within the next month or so that's going to get things to calm down. And ultimately, then that's when we're probably back to the races here, and hopefully there's a normalization and less of this volatility going all over the place.
One thing is interesting. When you look at U.S. Treasury bonds, they have come down since Liberation Day. Right. How should investors look at this? Conservative investors, should they consider this a long-term option? What do you think?
The 10-year is a very interesting question. So it ultimately comes down to who's going to be buying it. And what was interesting is in my thesis, I was looking at Japan's not buying anymore, Saudis aren't buying anymore, China's not buying anymore. What are they doing? They're buying gold. But the one thing and one place that we actually are seeing a major increase in purchasing of treasuries is through stablecoins. And so there was an interesting thing done in Europe. Would you like a Europe stablecoin or a USD stablecoin? And the Europeans, 96% of them said a USD. Worldwide, everyone wants the United States dollar as a standard. We're not going to lose the world's reserve currency. The world's reserve asset being the 10-year treasury, I think that that's been in question given our higher deficits, et cetera. And so if we look at doing strategic wealth reserves, maybe that gives the rest of the world a little bit stronger opinion of, hey, you know what, the United States has a little bit more going on behind just a printing press that'll just continue to print in the event that something shows up.
Dave, thank you so much for your insight and joining us here on Asset TV. And that'll do it for me. I'm Michelle Yu here at the New York Stock Exchange. We'll see you next time.